Yo, what's good, guys? Hope everyone is doing good on Saturday. Hoping you're not trading. Hoping you're not actually losing your mind. For anybody new here, welcome to the Traders Reality channel. This video is just going to talk about understanding the importance between a short-term day trading strategy and buying the hype that is happening across the board. All right. Something you really need to pay attention to in this game. It is emotionally driven. You're operating in uncertain environments. Naturally, our minds are engineered and geared and designed to seek the safest option because we want guarantees, which is why you get people asking, will Bitcoin rise? Will Bitcoin drop? Now, as a trader, your goal is to exploit, regardless of what price is doing, exploit the moves, understanding the importance of key zones that are there to trigger the emotional trader, the irrational trader, aka the retail trader. Now, the streams that we do, they are there to help people build a consensus or an understanding of what is happening right now. See, what you do see across the board, and I naturally do it myself, I project price because I understand the practice of projection. I gather confluences and I put them all together and I make a decision because that's all I can do. If I start taking confluences or start coming up with the idea that just because A, B happens, C and D needs to come through. No, it doesn't. Don't ever feel like just because you have come with your analysis or your indicators or whatever, and it needs to work because you've spent so much time trying to work out whether it's going to go up or down. The market doesn't care who you are, what you are. The only time the market cares about you is when your liquidity is on the table. All right? That's when you put your money down, you enter a position, now you're important. And you're only important for one thing. It's how long is the market maker going to keep you in your trade, whether it's going up or down? At what point will he emotionally trigger you to make the wrong move? How can you make the wrong move? Easy. The amount of times people come to me in the stream and in the chat, they say, Tino, I'm in a profitable position and I don't know what to do. I don't know where to close. I mean, come on, man. We've been in this game too long now and we've been doing so many streams. The whole idea is to get you to a point of realizing a profit. Now you're asking what to do with it. This is why 95% of traders lose, and that number is increasing because they're all doing the same thing over and over again. They're repeating the same emotional behaviors. Now, the only way you can come away from behaving like that is to really understand what is going on. Now, you've heard me many a times in the streams. I don't care about price, and frankly, I still don't care about price. All right? As a short-term day trader, if we zoom out on this chart, progressively you can agree that price is actually going down. But ultimately, Bitcoin is not really going anywhere. It's only going to previous zones that it's been to before. Now, for me to say that there is a crash happening right now, I would need to see a move like this happen continuously. We're talking going down to 10 grand. That's a crash to me. I've sat through a number of crashes in price, especially in Forex, where that is literally economically driven. Financial information driving price down, causing a concern, all right, across the board. When you sit through those sort of price movements, you'll understand and agree that what you're seeing right now by Bitcoin, it's not a crash. It's just people are responding to it as a crash. People need to put together an idea in their mind of what is happening because they don't know what's happening. We're stuck in a zone, all right? Last Monday, Bitcoin came down. Yep, crash-worthy like behavior. Look at how fast the move was. But it retraced it back up. I'm not seeing that behavior here. It's a nice, slow, controlled move to the downside. Market makers are building positions. This is why I've been talking about this zone right here. Go back and watch the previous streams, the last 3 streams, 4 even. You'll notice that I'm talking about this area here and whether or not it's going to continue from this point. If it doesn't, what are the chances of it coming down here and forming what we understand to be an inverted head and shoulders, which is a variation of a W formation? Everyone across the board is scared, especially holders, hodlers, whatever you want to call it. People are being fearful. They don't know what's going to happen next. They are anticipating loom and gloom. But that is opportunity for us. All right? We understand something. We understand that market makers need to bring price down in order for them to get their longs filled at lower prices. If you don't understand that, go back and watch the streams. The streams are designed for you to learn. All right? Across the board, many things on YouTube. There's many that will talk about how much money they've made and, yeah, great life. That's cool. My concern is about how much money I've made you. Because that solidifies what I know. That tells me that my strategy that I apply. Now remember, credit where it's due. I'm not going to dismiss the fact that Steve Murray, market maker method, and trader at home, PVSRA. I've taken those 2 schools of thought and created what we understand to be the hybrid system. Taking my interpretation of both systems, putting them together and applying them optimally in the charts. Now, if my understanding of my own strategy from those 2 schools of thought, if I've operated correctly and I've applied it with thorough understanding, I'm only going to know that if I pass that on to individuals and see if they can do it with no understanding at all about trading or about the 2 strategies that I've just discussed. And without further ado, yes, we've created 5 millionaires from the strategy. The stream has created $5 million traders. I think I'm the only YouTuber that can say that. I think I am. And I want to say congratulations to anyone that's killing it in this. People are pulling up. Tino, I made 1,000 trades this week. Profitable on 934 of them. What? Tino, I done 15 trades today, all won, back to back. 84 out of 84. 60 out of 60. Notice the frequency of trades. Short-term day trading. Now, I've been in the business long enough to understand the difference between swing trading and scalping. My character, my personality is designed for scalping. When I'm in a trade, if I don't see it going in my favor, I'm out. Why? Because I like to have the option of being able to enter again. A swing trader could be waiting for a pattern to play out for quite a while. He opens his position, he puts on a decent size, okay? And if it goes in his favor, happy days. He's probably accumulating, what, 10x, 20x on his account? Great. But what he does in 2 trades, I've got the luxury of doing in 50 trades. But I don't have that exposure. I'm in and I'm out. Which brings me to help you understand the following. If as a short-term day trader, if I zoom into the chart right now, all right? Zooming out, you can see that Bitcoin is going down. This is what we understand to be the markdown phase. I don't say bullish or bearish. You might hear me saying it, but I say it because it's just thrown about so much. But we're in a markdown phase, all right? Now, if I zoom in and drop in onto my territory, the 1 minute time frame, okay, you're not really seeing a crash here, all right? Yeah, granted, if you come back, yeah, it's dropping. We understand that. But if we looked at it from this point of view here, is that a crash? No. Price is rising. Can I exploit that? Most definitely. W formation. rise away, out of the zone. Rise level 1, drop. Rise level 2, drop. Rise level 3, peak formation, reset. Out the zone, stop hunt rise, M formation, drop, retrace, drop, retrace, drop, retrace, drop. Peak formation, drop, extension, fake out, stop hunt rise, reset the zone, recover the previous candlesticks, M formation, drop. Keeps playing out. This is whilst the whole crash is happening. People are losing their minds. The crash is happening. But as a short-term day trader, I'm taking longs and I'm taking shorts. The one thing I can guarantee to you in a crashing market or whatever market you want to call it is price will always revert back into the fray. They will always bring it back. Whether it's dropping to the downside, they'll bring it back into the medium. If it's rising to the upside, they'll bring it back down into the medium. Why? Because they need to induce. They always need to bring participants into the charts to make them believe that, oh, is this the point that it continues up or is this the point that it goes down? All right? There are orders all over the place, guys. As a short-term day trader, your goal is to get in and get out as soon as you can. If you get in on this point right here, price comes up, you get out here, and then you see that it goes up there, you never knew it was going to go up there. So what if you feel like you've left money on the table? Tell you what, look for another entry. That's the luxury of being on a smaller time frame. But being on a smaller time frame, okay, there is a bigger commitment on your behavior in the smaller time frame. You haven't got time to be a scalper and then when trade goes against you, you say, I'm just going to hold it a little bit. You know, I'm going to turn into a swing trader. I can see on YouTube, people are talking about it's going to start to rise. I'm just going to wait it out. No. Fast in, fast out. Do not expose your capital for a long period of time. Only if you are a swing trader, because that's what swing traders do. They anticipate swings. All right? They consider absolute extreme zones. All right? Consider the following. Let's go to the 1 hour time frame and start when what's happened here? Oh God, I hate this. All right then. So we'll start here when, if you guys remember correctly, I believe it was Daniel from Chart Champions. My guy called the top. He called the top 64 all the way down to 32. He went and even got that football jersey. My guy, what a guy. That was funny, man. Now, as a swing trader, in his point of view, he may have entered here, all right? But his stop may have been at the absolute high and a little bit more. Swing traders have to apply their capital to risk. If you're going to be looking for a bigger move, you're going to have to be having more exposure. All right, if you want to try and get accurate with your entry, okay, and start considering if you were to enter on this point here. So if this is an M formation, which we do see it to be, okay, if you were to enter at the fake move here and take this as your short, that will be a very accurate entry, okay? Where would your stop go? Well, that would be down to what you would deem too risky. Are you going to put it here? Are you going to put it here? Are you even going to wait and see if Bitcoin could go to 68 before it drops? So swing traders have the luxury of being able to really play around with how much money they want to risk if it goes against them. A scalper doesn't have that luxury. It can't sit in his mind like that. Because if, for example, you're going to go short at a turning point in the market, all right, as a swing trader, you're going to factor in your risk reward and say, right, I want a 2-to-1, I want a 3-to-1, or whatever, okay? As long as it keeps going down and as long as it doesn't go up, my position is good. But a scalper, because he's only in the trade for a short period of time, he may be committing more sums, which means that there's a much more higher risk when you're on the smaller time frame. But that doesn't mean that you can't enter using small amounts of money. Okay, you can do that. Now, that's how I started out. The key thing with scalping is sample size. You need to build yourself a sample size where it verifies your consistency of understanding this strategy. All right? That's what you need to do. Swing traders can't really do a big sample size. A swing trader will say, I placed 11 trades this month and 7 of them were profitable. That's his sample size. Of course, the more you have, the better. But he's trading turning points. All right? A scalper, if he says I've got a sample size of 11 trades and I lost on all of them, that sample size is terrible. You can't make a judgment on 11 trades. Now give me 500, give me 1,000 trades, and then tell me what your win ratio is then. You'll say to me, oh, I've done 1,000 trades. 600 of them were profitable. Great, okay. And 40% of them were losers. But were your losers less in value than what your wins were? That is ideally the situation you want to be in. It's great being, consistent and having high win rates, but you can be a profitable trader at a 40% win rate. It's because your wins, when they come in, you get paid on them. And when your losses come in, they are small and sweet. No conviction, no bias. I don't care if it's not going in the direction that I want it to go. Get out. This is what I'm trying to get across to all of you guys. Regardless of whether a pattern plays out or not, this is a short-term day trading strategy. We don't care if there is a bullish market, bearish market. It could be a fruit market for all you want. Who cares? We only care about markups and markdown phases where market makers are moving price to get their value or orders filled at lower points or at higher points. We don't want to fall into the idea of value. What price should Bitcoin be? Who cares? All you care about is whether price is going to hit the 50 and continue or hit the 50 and reject. Can you exploit that? Of course you can. The basis of this strategy is designed on the rejection of the 50. What do you need to see? You need to see price above the 50, come away from it, come back down and retest it, continuation to the upside. That's what you want to see. But are you going to make a judgment on the fact that if Bitcoin breaks above the 40K mark, comes back down and tests the 38, and you're going to put the money down because everyone across the board thinks that 38 is great support? Don't fall into the trap of value. You're not buying into a company, you're buying into a coin. Okay, you're buying into an idea. You're trading people's emotions. You're trading people's concept of value at a certain point in time. You're trading the amount of liquidity that is appearing at a specific point in the chart. Now, we can throw projections and predictions or, miracles, oracles, whatever you want to call it, wherever price decides to go. All right? Your goal as a short-term day trader is to exploit the volatility that appears in the marketplace. And how do we determine the volatility? Well, we establish it at key zones. And what do we understand as key zones? Okay? 50 EMAs, levels. Yeah, for example, M formation, drop level 1 rise, drop, rejection of the 150 EMA, price drops down, comes back into the 50 EMA, drops down again, takes out the second level, valid level break, drops down, comes back into the fray, drops down again, stabilizes. Price then comes back up into the fray. Moving averages contract. Now they expand away. You've got price coming down, accumulation there. Price hits the 50, comes back down. Bigger pattern, swing traders, inverted head and shoulders. For a short-term day trader, yes, it's nice to have a look at what's going on in the bigger picture, but you would have got your money in and out to even be concerned about what's happening here. There are days that I will trade the W formation, the bigger W formation, or should I say, I will trade the development of it. So when price comes to the lows down here, I'm looking to get long. I am waiting for longs because these big wicks and vector candles to the downside are implying volatility. Market makers are trying to move price to induce the trader to go short. Market maker needs to get his money back because he's just giving it all away, getting in his longs and filling the retail traders' shorts. He brings it all back up by taking out the stops that have been placed by the retail trader, because all those lovely books out there tell you, always put your stop loss. You're showing your hand. By me telling you not to place a stop loss, I'm not encouraging you to trade irresponsibly. What I am saying to you is this is how the system works. Stop losses, liquidation points, the same thing. All right? You practically need your liquidation point to be at such a point where it just does not exist or price would never get to it at a moment's notice. All right? You don't need to care about it. If you start having liquidation points where if you were to enter long, for example, if you were to enter long here, all right, and your liquidation point was down here at 31, or should I say 32, for example, you're now playing with fire, my friend, because there's still areas of liquidity that they can tap. Are we anticipating 3 pins to the low? All right. Is this expansion away from the moving averages right here on the 1 hour time frame? Is this going to be the move that they send price down all the way to this area here, and then we see a nice retrace back up? Because price is now edging away from the moving averages. All right. So could this M formation here be a drop, retrace, peak formation? Let me draw it out for you. So you've got, let me stop this. You've effectively got yourselves M formation right here. Yeah. Price then comes down, drop, level 1, drop, level 2, drop, level 3, peak formation. Because they will use the weekend to set up the chart. They will set everything up over the weekend. As long as Bitcoin stays in this zone right here, all right, we are still looking good. Yeah, my charts look chaotic, but I'm trying to deliver education here to get you to understand, all right? Because your understanding implies my understanding. Now, I hope you've enjoyed this video, guys. But the takeaway for you is this. Make a decision. If you're going to buy into the hype of what's happening with Bitcoin right now, buy into it. Become it. All right? But don't get all messed up when things change direction. Okay? If you're going to be a short-term day trader, be a short-term day trader. Embrace everything that comes with being a short-term day trader. All right? We understand now that Bitcoin is accumulating. So short-term day traders can exploit this sort of behavior. Swing traders are sitting on the sidelines. They're waiting for things to happen. They're waiting for clear confirmations to the upside, if it's going to be happening. Or they're waiting for a clear break to the downside. Swing traders. Okay? With each approach that you apply in this game, you must be committed to it. Don't intertwine between the two. Don't be a scalper and then turn into a swing trader in the same trade. You're going to set yourself up for a lot of emotional barrages in your mind where you're going to just be taxing your trading psyche. Money can be replaced, guys. That's easy. But what about mental capital? Yeah? If you lose 10 grand, okay, you can get another 10 grand. And then you lose that. And then you lose another 10 grand. Before you know it, 10 grand seems to be a psychological block in your mind that you can't surpass 10 grand. And that stuff happens, guys. It's every time if your price comes above your 10 grand, it's like subconsciously you sabotage yourself and then you become irrational and you become so emotional that, yes, I've managed to go over 10 grand. And then all of a sudden it goes back down again. You start behaving in a certain way where you just can't break the 10 grand mark. Been there, done it. The only way you can come away from this sort of mentality is if you see things systematically and objectively. What is price doing now? Price is dropping. Okay, that's fine. Is it coming down to certain zones? Yes. Let's play the waiting game. Let's see what it does in this zone. Do I need to take a trade? No, you don't. Oh, so price has rejected the 50 EMA. Oh, I'm missing out on the fact that it's dropping now. Everyone on YouTube is talking about Bitcoin crashing. I feel like I'm missing out. I could be making so much money now. Yeah? It's funny how the traders that have made the money aren't actually in trades right now. The guys that have ripped the move to the downside aren't in trades right now. They're waiting. Let the irrational trader start trading these zones. You know, are you going to try and catch the breaks? You're going to try and see if Bitcoin will break down below these zones. And you know what? If it does, so what? Bitcoin can go all the way down to 1 if it wants. People trade coins that are like 0.0005. All right? That's what I'm saying to you guys. Forget price. If you really care about price, go and become a value investor. Go and buy some stock. At least you've got a price earnings ratio. You've got quarterly earnings. You've got company analysis. You've got people actually paid to talk about this, about the stock. You're trading in an emotional environment. You can become emotional or you can be systematical. It's up to you. Welcome to the hardest, easiest way to make money.